favorite trade of the month. It has more than 1 to 10 risk reward ratio, and I can confidently say it has above 50% chance of success. And it's Liaotu. Maybe you know the brand, maybe you don't. It's the Chinese brand that stays behind some of these crazy models. And the competition in China recently in the car industry has been going crazy. There are more than 150 brands which are registered. They're all cutting prices. They're trying to get an edge in market share. But despite the fact this company is sitting at very attractive level, being the red zone over here, again, we're going to play this with options like always. And if you stay until the end of the video, you see why this is a very high conviction trade and the risk reward is just crazy. The expiration we are looking at would be September. And just before I go into more details about the specific strikes I'm choosing and the cost of the trade, I want you to look at something very specific. Usually how long it takes for the price to rebound from this level to somewhere in the around the $30 area is usually within 3 to 6 weeks. As we can see over here, this is a weekly time frame. It took basically 1, 2, 3, 4 weeks. Here it took a bit longer. Over here it didn't quite went to the low levels we are currently facing, being the $17-18, but still we're going to count this one at this low as it was pretty close to the current levels. And it basically took 1, 2, 3, 4, 5 to 6 weeks, as we said. And here again another 2, 4, another 6 weeks. Here another 3, 4 weeks. So basically what we need, the time we need for the trade to develop is between 3 and 6 weeks. And I'm placing this vertical line at our expiration that I'm going to present you in a second. Basically we have more than 6 weeks until September, as the time of recording today is 30th of April. What I'm holding quickly right now is what I'm currently holding are the $23 September calls with expiration of in about more than 6 weeks. My average price is 75 cents and my total cost is just $1,500 for 20 of them. I'm getting into more specifics right now with the risk reward. I'll use the same size of a position I have, 20 of them at $23. But obviously you don't have to get that many if it's too much of a position size for you. Total cost, as we said, was $1,500. Now let's look how much. Obviously we can lose all of the investment. That's what I like about options. It's pretty simple. With the downside, it's controllable. Basically, if the price is doing everything but not increasing until September, we are just going to lose $1,500. It's predetermined. On the upside, I'm going to draw another rectangle over here in the 26.7 zone to 30. Usually the price every time when it was increasing in the 4 to 6 weeks depth zone, it's been going even higher than 30. It's been going to 32, 36, sometimes even 40 level. But again, I'm drawing it over here because maybe someone would like to exit early, but we are going to calculate 30 level for our risk reward trade. And it's pretty simple. At $30, our $23 cost would be $7 in the money, which basically means $700 each. And 20 of them would be 14,000. That's 14,000 excluding any premium that would be in them, and most likely when they're that deep in the money, there is going to be none. So we just keep it simple, 14,000 to 1,500. I told you it's more than 1 to 10 risk reward ratio, but it's actually around 1 to 9. But still, it's nothing to complain about. Most traders are struggling to find everything above 1 to 2, 1 to 3, and they are not very convicted in it. So we have 1 to 9 risk reward ratio, and the biggest question here is how likely is it for it to happen? What I'm going to pull up now is the seasonal chart of Liautu, and I want you to see something which becomes very obvious. May and June. Out of the 5 years that we have, 4 of them has been positive. June, it's kind of 50-50 here, 3 versus 2. July is mixed. But I want you to see the hit and the size of the move that has been happening in May 2023. Yeah, in May 2023 it's done more than 20%. The upcoming June more than 20%, and another 20% in July. Over here 11.50. So we can basically say that the price can go. It's pretty volatile, and it can go between 20 to 40% in a month. Again, keep in mind this is not an exact number. This is the closing price for the month. So for example, in May 2023 the price closed at 23% plus, but at one point of time the price could have been up, let's say 30 or even more percent, and it just closed lower. So what we need over here is somewhere in between 50% to 60-65, and it's pretty doable. It's done it in the past, as we said already. I'm going to look over some other strikes to see why these are the best options, but I've already looked through them all, and I came to the conclusion that these are the best strikes. I'm just going to look just one strike further, the December ones, and just look at the cost. It would be, yeah, the last contract someone got for 138, we can say that's 130. It's almost double than what you can get them for 65 to 70 cent diapason for the September ones. So the risk reward ratio is skewed, and September ones are the best. And honestly, you're also catching the June, end of May, but I believe it's going to be beginning of June. But anyway, you are catching it both in, doesn't matter when it is, you're catching it with the September options, and that's another catalyst that may lead for the price to go higher. And that's it, guys. Stay tuned, comment, like.